Good morning guys, it's Nick at Optima PS. I hope you're all well. Thanks once again for coming back to my channel, and my apologies, I've not been on for quite a while now. Life just got ahead of me, I've had other things going on, and to be honest, as I always say, I only come on and talk to you guys here if I think there's something that I particularly need to say, and I think you need a little bit of a different opinion on things. And for a while now, we've just been sort of steadily plodding on in the right direction, sidewise direction, whichever way you want to look at it. And there wasn't a lot to say, so I only come on when I think I've got something to share. So today I want to talk about something that's cropping up more and more as a subject matter that people are discussing, and it's gaining a lot of gravity, if you like, as a concept, which is borrowing against your crypto rather than withdrawing. I mean, as we're all aware, we all need to take some out. That's why we do investments in the first place. It's to generate us some wealth, and we want to spend that wealth. There's no point being the richest guy in the world on paper and never touching it. And there's a concept out there right now that says it's better to borrow against your crypto than to withdraw it and spend it. And don't get me wrong, there are lots and lots of benefits and drawbacks both ways around, but I wanted to look at that in more detail. Before we get into the video, as ever, you know me by now, my name's Nick, I am a financial advisor, but I'm absolutely not your financial advisor. I don't know you, you don't know me, I don't know the first thing about you, so I could only ever give you very, very bad financial advice, and I'm not allowed to do that. So anything I say or do in this video is absolutely just me sharing an opinion over the internet for anyone who may be interested, in the hope that you take some value, but it's absolutely not to be taken as financial advice in any way or form, because it would be awful financial advice if you took it that way, because I don't know the first thing about you. So let's take a look at the video. If you do like this subject, please punch that like button. It really does help me with the algorithms on YouTube. Really does come in handy, so please do that if you like what I have to say today. Before we get into it, let's take a look at where we are in the world. Taking a look at the markets right now, we've been pretty steady for a while now, just sort of trending sideways, no real movements. Yes, we've dipped a little bit on the back of the situation in Iran and Israel, what's going on right now. Don't panic about that. Don't get me wrong, I don't want to belittle any global economic or global situation when it comes to things like wars. Wars are always a terrible thing. But when it comes to the markets, they tend to have a very limited short-term impact. History shows us that there's never been a global conflict that's caused major problems long-term, ever. We can go back to the Second World War as probably the biggest impact, and even that one lasted a few years, and then the world began to move on again. With this, I have no fears that it's going to lead to any major crash. So from the point of view of your portfolio, don't worry about it. Of course, you know, it's a global thing. I'm not going to belittle wars. It's a huge thing. It's an awful thing. But I'm talking specifically with regards to an investment portfolio. Don't worry about it. The world will be back soon. There are too many global macro events taking place in the crypto world right now. If we just took a look at XRP, you know, we've got Judge Torres likely to make a decision one way or the other about the appeal this week. We've got companies coming out of the woodwork left, right and centre creating XRP reserves. We've got the Genius Act going through from the stablecoin point of view. We've got lots and lots of open interest from the big players now. ETFs are on the horizon. They may not be approved instantly. They may take another month. They may delay them a bit longer. I think we've got to October for the real decisions there, but they're coming. They're coming. The futures ETFs are already approved. The futures ETFs always lead the way before the spot, and they will come. They will come. No two ways about it. When the Genius Act is passed, when the lawsuit, the appeal side of things is dropped, when there's final absolute clarity regarding the coin, you're going to see big players, let's say, revealing their hand. I'm not going to say every single one of those NDAs is going to come out and say, we're using XRP. I don't think the world works quite like that. But you're going to see big players coming out one way or the other and stating or showing their hand, showing what they're prepared to do. We're already looking at real-world asset tokenization now. There's things happening on the ledger. Everything we've hoped and dreamed for this past 7 years is coming to light now. Will there be a single flip of a switch? I don't think so. You know, I never have. I think there's going to be a series of switches which are flipped, and I think that's going to lead to a very progressive, steady incline in the price. I think there'll be an immediate jump. I think there'll be an immediate jump from $2.50, which is clear, or $2.15 as we are today, which is clearly too low, to a more reasonable point. But whether that point will be $5,000, $500, I don't think so. I think we'll see $50 quite quickly. I think we'll see $8 to $10 based purely off retail. I don't even think you're going to see a problem with that. I think then we see the utility side kick in. What it's going to do to me is it's going to make life very difficult to try to second guess what happens next from that. Because typically with a retail run, you go up, you hit your max, you hit your highs, and then we come tumbling back down again. And I think we might see institutional adoption affect the normal cycle when it comes to coming down. So I'm more concerned about selling too soon than I am about holding long term for certain. But I do intend to take some profits. I think everyone should be taking some profits. We've all worked hard for this. We've all waited and been patient long enough. So that side of things is going to happen. And that's what brings me on to this conversation today. Before we get into it, let's just take a look. We've got Bitcoin at 105,000. We've got Ethereum at 2.5. We've got XRP at $2.15. BNB at 650. Scrolling through, Solana's 154. You've got Dogecoin at 17. You've got Tron at 20. You know, we're looking at a situation where most things, we're looking at red, aren't we, in the main. Ethereum's got an ever so slight profit over the last 7 days, but everything else is looking really like we've been red for a while. There are one or two success stories. I had a little bit of ZBCN. I chickened out. I was gonna buy $1,000 worth, and I chickened out and bought $300 worth, and it went up 500% in a week or something like that. So I kicked myself a little bit about that. But when it hit 70 cents or so, I did sell the vast majority and just left my original stake in. So I'm sat poised to get back in there. I think that's going to probably come back down to the golden ratio, and I'll buy back in at about 30 cents, something like that. But there's been one or two other little success stories. There's a couple of coins that I'm looking at with more, more observation right now. I'm paying more attention to them for the first time in a while. I think this market is about to go, taking away the situation in Iran, the big global situations that affect markets no matter what happens. Everything's looking primed for one more pump, maybe another. I think we might see a big pump now and then a level off and then a final one towards the end of the year, or we may just see the pump now and that's the last one. I'm going to decide that when I think we're near the top. I take advice from lots and lots of technical analysis guys, or when I say advice, I observe what they do, I observe their thoughts, and I make an overall sort of general decision for myself based around that. But realistically speaking, we're going to see some kind of rally on these prices. Nothing stops here. Nothing stops here. We might dip a little bit first and then pick back up, but nothing stops here. We're not at that final high price yet. And so when I talk about taking profits, this is what brings us on to this conversation. So there's a very, very big narrative right now where all these influencer guys are coming out and saying, rather than cash in your crypto, take profits. Now, for certain, one of the big aspects there is that if you took, they're talking about taking profits by way of a loan as opposed to cashing in for your profits. One of the big benefits there is that there's no capital gains tax on a loan, and you may pay capital gains tax depending on where you are in the world on your withdrawals. So you will create a taxable event in most places if you cash your crypto in and place it back in the bank. Taxes are a part of life. We can't avoid them. We can try our best to legally mitigate as many as we can, but we can't avoid taxes. But one way to do that, to avoid capital gains tax, is to take a loan against your crypto. So I'll use a really simple example. Let's imagine, you've got $100,000 worth of crypto and you want to buy yourself a new place. So you're going to put a big deposit down. And the question mark is, do I sell my crypto and potentially pay capital gains tax, or do I borrow against it? Now, the big benefit is no capital gains tax. The other big benefit is you get to keep your bag. Keeping your bag is a big thing. We all have grown these bags. We've been diligent, we've been smart, we've invested our money wisely, we've tried our best to accumulate as much as we can, and cashing that in always comes with a risk, because if you cash it in at the wrong time, you're going to kick yourself. You know, we've all seen those tweets from people who cashed in their Bitcoin at $7 thinking they made a load of money. I actually did it myself. I bought some Bitcoin and I cashed it in at what I thought was a good return. I had about 10x my money, and it came back and bit me on the ass. Now, I'm not one of those people who looks back with overly large amounts of regret, because I'd have spent that money 1,000 times between then and $100,000. At the time, I didn't have nearly as much conviction. It was a little gamble. It was a little play in this new thing called Bitcoin, this magic internet money, and I threw some money in and I 10x'd it, and I was very pleased with that, and that money came in handy in a different way. It also got my attention to the crypto world, and I've now got a nice big fat bag of, well, I say big fat bag, by my standards a big fat bag, that I never would have had if I hadn't first bought that Bitcoin and drawn my attention to it. And it was just a conversation with a guy in a pub that got me to do that back in about 2012. So, you know, looking at this, there are drawbacks to cashing in your bag. There are benefits to loaning or borrowing against it. In the market, in the finance world, we call it leveraging. As a rule, I tell people not to do it because there's also a lot of drawbacks that can come with that. A great example being, if you borrow against your crypto, you still have monthly repayments to make, right? That's the way these things normally work. I haven't looked into it in such stupendous detail, but I'm guessing somebody lends you $100,000 against your crypto bag, and they will cash in your crypto if you default on that loan. So I've just jumped on here. I mean, what got me onto this was just a post. I don't know this guy, XRP Chancellor. He made a very accurate post. If you invested $1,000 in XRP 7 years ago, you would have $1,000 today. And I sort of jumped on that and I said, yeah, but if you'd invested $1,000 into XRP, then continued to dollar cost average in with what you could afford each month, you'd probably be able to retire today. Which is a very important point, right? There's always two sides to an argument. Not having to go at this guy, it's just simple. You know, he's stated a very accurate point, and I've then come back with a very accurate point. It's just part of the investment world. People do it differently. People have different opinions. But what got me onto this was this post, and I thought, it's interesting, right? So if back 7 years ago, rather than cash in your $100,000 to do whatever you wanted to do with it, you'd be about flat on XRP. Now, XRP is a slight anomaly. We've had the lawsuit, we've had various things going on, and it's not had the same price action as other coins. But this channel focuses predominantly on XRP. Most of my audience are XRP bag holders, and so it's worth looking at this in more detail. So if we'd taken a loan back 7 years ago, now, again, interest rates were different back then, but I can only work on where we are right now. The average interest rate being offered on a loan against your crypto holdings right now is about 5%, which is actually very good. If you borrow from the bank, you probably pay more than that. So that's actually very good. But they're doing this for a reason. They offer good terms on loans. It's in their interest for you to default, because if you default on your monthly payments, they get to keep your crypto. You know, that's a big risk. That's a very big risk. I've got this in pounds because I think in pounds, but it's linear, it's the same concept, right? If it was $100,000 you borrowed over 7 years with an interest rate of 5%, you are liable to repay £1,408 a month, which means you'll end up paying back $18,287 in interest, which isn't too terrible. Normally over 5 years, you would expect to make more of that in the growth of your crypto. But in this case, you wouldn't have done. You'd have paid $18,000 in interest, and your crypto wouldn't have moved at all if it was XRP. Now, again, caveat, that is a anomalous period of time, because I don't expect there'll ever be another 7-year period where XRP doesn't go up or down in value. But in this particular scenario, that would have been accurate. Now, again, back then, the loans probably weren't available, and back then, capital gains tax on crypto wasn't a concern because most governments hadn't come round to the concept of taxing crypto yet. But I'm just looking at this purely on face value with nothing but the numbers. So you'd be liable to pay $1,408 or pounds per month every month without fail for 7 years. I'm not going to say they'd swoop in if you were day late, but if you missed a couple of months, they'd have taken your crypto from you, which back then was about, give or take 45,000 XRP, something like that. I wouldn't want someone to take 45,000 XRP off me. I really wouldn't. And so let's take a look at this from a straightforward point of view. I jumped on and asked Grok. Grok is now my best friend, my personal assistant. It's smarter than any personal assistant I've ever had, and he's absolutely free. If you'd invested £1,408 per month into XRP for the last 7 years, how much would you have accumulated? Because that's going back to this post where I mentioned the dollar cost averaging. So let's imagine I didn't cash in my let's imagine I did cash in my $100,000, and rather than pay the interest every month over 7 years at £1,408 a month, and the capital back obviously, I'd have just dollar cost averaged in. I'd have taken my withdrawal and dollar cost averaged in. So I'm not going to go all the way through this because Grok spends a long time justifying the methodology, how it arrives at the points. Obviously there's an exchange rate with pounds, but we can ignore that to a certain point because it could be dollars we're talking about. It's essentially the same concept. Realistically speaking, what we're looking at here is it's making assumptions. It's using an average price over the year, not the daily changes in average price because that would just be far too complicated. But it's going with an average price of 30 cents, 25 cents with spikes up to 70, 80 cents, well, yada yada. It goes through it. It justifies how it arrived at these numbers. I'll let you scroll through this, go back to the video, pause it, scroll through it, or re-watch this slowly in your own time. But essentially what we're talking about is, had you invested £1,408 a month over the last 7 years, you would have accumulated approximately 219,648 to 260,000 XRP, worth 366 to 435 grand at today's price. Your profit would be roughly 248 to 316, 210 to 268% return on investment. Now, there are some caveats there because XRP didn't perform as well as other cryptos because of the lawsuit, because of various things, but absolutely, undoubtedly, if you just cashed in your XRP 7 years ago and spent 1,480, whatever that number was a month, buying back, you'd be far better off now. You'd have 260,000 XRP rather than give or take 45. No one can tell you it was the right thing to do back then to borrow against your XRP. Now, there is a difference here because if we take a look at the next question I asked Grok, was if I'd done the same investment into Bitcoin for the last 7 years, how much would I have accumulated? Now, because Bitcoin, again, it was volatile, it was up and down, it was higher price, which makes it a little bit different, but it was up and down. But Bitcoin has performed better over the last 7 years. Then again, I'll scroll through this. You can go back and rewatch it in your own time, but it's assuming 6, 5, 9, 9, 5, 35, 20, 30,000, 60,000, up to 100,000, 109,000 by now. Then you would have made a better decision to borrow against your Bitcoin 7 years ago. Because again, yes, okay, you've paid the interest, but if you'd have accumulated Bitcoins over that period, you'd have accumulated less than if you kept them. Just going through, and it's a big difference. If you take a look down here, final answer is if you'd invested 1,408 per month in Bitcoin, then you'd have accumulated approximately 9.2 Bitcoin worth 707,000, which represents a profit of 589,000. So a very good 7 years, no two ways about it. But if you just kept your Bitcoin, if I had 100,000 in Bitcoin 7 years ago, what would it be worth today? Simple calculation, you'd have seen 1.68 million today, because you've still got more Bitcoins if you'd kept them than if you'd sold them and averaged back in. There'd be about 20.4 Bitcoins, 20.4 Bitcoins, which is worth more today than the 9.5 or whatever you had the other way around. So it's a double-edged sword. There are pros and cons both ways round, and it depends on what we think the future holds when it comes to the movement in price action of these coins. So the likelihood is XRP is not going to see a stagnant 7 years ever again, and the likelihood is Bitcoin will also keep going up in value, maybe not in the same percentile gains, but it's going to keep going up in value. If you listen to Michael Saylor, it's going to be $1 million a coin. So it's probably financially better off for you to take the loan, and you also avoid the tax situation as well against your crypto. But it still comes with that very, very big caveat. Can you guarantee that every month without fail you can afford that monthly repayment? And it might not be $100,000. Most people wouldn't be too worried about the tax due on $100,000. It might be $1 million you've got in your portfolio. Can you afford $14,000, £14,000 a month to be repaid in interest on a loan if you aren't cashing in any of your crypto portfolio? Most of you guys out there, you're crypto guys, right? I'm not saying you have no assets. I don't know you from Adam. You might have $10 million in the bank for all I know. But I would imagine most people, if you're not cashing your crypto in yet, a monthly repayment of $14,000 is a significant chunk of change. It's a significant chunk of change. And so what you'd be hoping is that you could either afford it from whatever else you do in life, from your job, from your rental portfolio, from your other investments, whatever you've got, or you'd be funding that by selling crypto down every month. Now, again, cashing in $14,000 worth of Bitcoin rather than $1 million might be a good idea, but we're looking at a situation where it's an awful big risk. Life changes. Life changes on all of us. I work in sort of private client investment management. I look after people's portfolios. It gives me an insight into the lives of 150 clients or so, and I get to see that life kicks you in the nuts an awful lot. You might think you've got the safest job in the world, and it's gone. You might think you're set for life because you've got $5 million in crypto, and something bad happens. Somebody needs an operation. You buy a house and it turns into a bad deal. You open a company, it goes wrong. 1,000 things can go wrong that mean guaranteeing you can meet that monthly repayment is a big ask. A big ask. And so I'm not saying that taking the loan is a bad idea. I'm saying each and every one of you out there needs to sit down and look at this from a personal point of view and analyze all the pros and the cons. Because I guarantee you now, those companies who are lending you money against your crypto, yes, they want the interest, of course they do, but it's an ideal scenario for those people if you can't afford the repayments for whatever reason and you default your loan. And I guarantee these companies, we're still in the Wild West. We're still in the Wild West of the financial sector. This is the cutting edge of finance, which means it's the Wild West of finance as well. And borrowing money from your bank against your house, there are rules and regulations that stipulate when they can swoop in and repossess that house. And they will do it. They do it all the time, right? They repossess property all the time. But there's still rules against it. You'd go to a court of law and the judge would decide if the bank are being reasonable or unreasonable, if you have the ability to catch up in a different way. They don't just swoop in and sell your house. So there's differences here. So I'd be really careful because I think these companies are doing this. Yes, they want the interest. If all goes well, they get a nice return on the interest. But actually 5%, 5% isn't a great rate of return on interest right now. If you go to the bank, you're probably paying 7 or 8 on a mortgage. So 5% is a low APR to entice people in because what they want to do is they want to either make that 5%, of course, but they also are quite happy repossessing people's bags. So be really, really careful, guys. The benefits you get may not outweigh the drawbacks if life goes wrong. I hope that makes sense. If you do like what I said, please punch that like button. I know it's a bit of a negative subject because it's something that nobody wants to talk about, negative things like losing money, losing your crypto bags, getting repossessed. But I'd be really, really careful before jumping in feet first and taking one of these loans because there is a chance that you will lose your, the whole reason of doing the loan is to not lose your crypto bag, and you may end up losing your crypto bag for far less than it's worth. If you borrow against your crypto bag today, $100,000, and it's worth, let's say it's worth $150, if 5 years down the line it's worth $1 million, that loan's still secured against the number of coins you have. and they could swoop in and take the coins. I don't know quite, I've not looked into the details how this one works, but I guarantee if they have to repossess, it will be more favourable to them than you. No two ways about it. They might fire sale your coins, crash markets around them a little bit, drop the price down, and get less for your bag than you'd have done if you sold it in an organised fashion. There's 1,000 things that can go wrong, and I just want everyone to look at this. It's not a magic, instant, risk-free way of getting your hands on some cash without cashing in your crypto bags. There's 1,000 things that can go wrong, and I'd be really, really careful. Personally, I'm not going to touch them with a barge pole. I'd rather cash in some of my portfolio and worry about it later. I'll probably do it the other way. If I'm sat there looking at it and I think I want to take 10% of my portfolio out, I'll cash 20. I'll leave the other 10 in stable coins, let the prices drop down, and then buy back in to try and accumulate those 10 back again. That happens, and that's going to keep happening. The world will become more stable with crypto as time goes on. The more institutional money that flows in, the less volatile the price becomes. The cycles will still happen because they happen with traditional markets. If they happen with the S&P 500, they're going to happen with crypto. But the swings, the peaks and the troughs will be different. And so there'll be fewer glaringly obvious times. We might not see the price of crypto drop by 80% again like we did in 21, 22. But we'll see it drop by 15%, maybe more, maybe 50, 60 till this next time, but as time goes by, less. But there'll still be peaks and troughs to take advantage of, no matter how stable this market becomes. And my personal, and that is only personal, not financial advice, my personal opinion is there's less risk involved in cashing some of my bag, swallowing whatever taxes they want me to pay. It won't be very much for me because of my personal circumstances, but there will be some, and worrying about accumulating those coins back again through the next bear market. That's what I'd rather do, because there's too much risk associated if I can't afford those monthly repayments. And I think the lending companies will be quite keen to repossess because they know the long-term value of your bags as well as you do. And it will always work in their favour. Even if they repossess when prices are down 50%, they just have to wait 4 years, right? So be careful, guys. I hope that all makes sense. I hope that's brought some value to some of you that might be considering this as an option. If you like what I say, please do like, subscribe to the channel. I really, really appreciate it. For now, that's me leaving out. I was about to sign off with my normal sign-off, and I forgot what it was, but I've just remembered it. Stay classy, crypto.